Every piece of content you create is marketing. Every upload is a touch point that drives revenue. The problem? Most creators build this entire revenue machine without ever building the financial infrastructure to support it. Content creators earning real money but still treating their business like a side project? They'll understand that content creation is a legitimate entrepreneurial field and learn the single most overlooked compliance issue that could dismantle everything they've built. One missed tax obligation can trigger audits, penalties, and back tax liability that wipes out years of ad revenue, brand deals, and digital product sales. Most creators never see it coming until it's too late. Let me ask you something. If you are making money on YouTube, TikTok, or through digital products, do you think of yourself as a business owner? Those creators do not. They think of themselves as influencers, streamers, or hobbyists who happen to get paid. But here's the truth. The moment you monetize, you are operating a business. Case closed. Businesses have obligations that do not care whether you understand them or not. I'm talking about sales tax Nexus. It is the single most misunderstood, most ignored, and most financially dangerous compliance issue facing content creators today. And by the end of this video, you will know exactly why it matters, what triggers it, and how to protect yourself before the state tax authorities come knocking. Content creation is not a side hustle anymore. It is a viable entrepreneurial field in the digital age, and the numbers prove it. In 2024, the global creator economy was valued at over $250 billion. You have creators earning 6 and 7 figures through ad revenue, sponsorships, affiliate commissions, memberships, courses, digital downloads, and consulting. YouTube alone has paid out over $70 billion to creators in the past 3 years. But here's where it gets interesting. The platforms are not just distribution channels. They are marketing engines. YouTube is your billboard. TikTok is your awareness funnel. Instagram is your trust-building tool. Twitter is your direct line to high-intent buyers. Every piece of content you create is marketing. Every upload is a touch point that drives revenue. The problem? Most creators build this entire revenue machine without ever building the financial infrastructure to support it. They have the audience, they have the monetization, but they do not have the back office. And that is where things collapse. Because once you cross certain revenue thresholds, once you sell digital products across state lines, once you offer coaching or consulting to clients in different jurisdictions, you are no longer just a creator. You are a multi-state business operator, and multi-state businesses have rules. Let me show you why the platforms matter so much from a business perspective. Most creators think their job is making videos. It is not. Their job is building an audience and monetizing attention. The videos are just the vehicle. Think about how a traditional business works. A company spends money on advertising to attract customers. They spend money on sales teams to close deals. They spend money on content marketing to build trust. As a creator, you are doing all three simultaneously. And the platforms are your infrastructure. YouTube is doing top-of-funnel marketing for you 24/7 for free. Every video you publish works while you sleep. It builds authority. It answers objections. It pre-sells your audience on whatever you offer. A single evergreen video can generate leads and sales for years. That is not a hobby. That is an asset. TikTok and Instagram Reels are your awareness play. They put you in front of people who have never heard of you. Then your long-form content warms them up. Then your email list or community closes them. This is a full marketing funnel, and you built it yourself. But there's a catch. The more successful your marketing becomes, the more complex your business becomes. More revenue streams mean more tax jurisdictions. More customers means more compliance exposure. More growth means more risk, unless your financial architecture is built to scale. So the platforms are not just where you create, they are where you market, sell, and distribute. Every dollar that flows through them creates a paper trail that tax authorities can follow, whether you have organized your records or not. Before we get into the specific tax issue that catches creators off guard, if you are finding this helpful, consider subscribing. We break down the financial and compliance realities of running a digital business in the digital age, and the next video might save you thousands in penalties. Now let us talk about the thing most creators have never heard of and even fewer understand: sales tax Nexus. Here's how it works. Sales tax Nexus is the legal connection between your business and a state that requires you to collect and remit sales tax on transactions with customers in the state. It used to be simple. You only had Nexus where you had a physical presence, an office, a warehouse, employees. In 2018, the Supreme Court changed everything. The Wayfair decision allowed states to impose sales tax obligations based on economic activity alone. It is called economic nexus, and it means you could trigger a sales tax obligation in a state you have never set foot in, simply by selling enough products or services to customers who live there. Here's why this matters for creators specifically. Let us say you sell a digital course for $500. You promote it on YouTube. Someone in California buys it. Someone in New York buys it. Someone in Texas buys it. Each of those states has its own economic nexus threshold. In some states, it is $100,000 in annual sales. In others, it is 200 transactions, regardless of dollar amount. If you cross that threshold, you are required to register, collect, file, and remit sales tax in that state. Your business basically becomes an escrow account. Now multiply that across every state. 50 different jurisdictions, 50 different set of rules, 50 different filing schedules. Some states tax digital products, some do not. Some tax services, some exempt them. Some have marketplace facilitator laws that shift the burden to platforms like Etsy or Amazon. But if you sell through your own website, through Stripe, through PayPal, or through direct invoicing, the burden is on you. Here's the part that keeps me up at night for creators, and technically I am one of them. Most creators do not even know they have triggered Nexus until they get a notice. They are not collecting tax. They are not filing returns. They are not remitting payments. So when a state audits them, and states are increasingly aggressive about this, the liability is not just the tax owed. It is the tax plus penalties plus interest, often stretching back multiple years. For a creator doing 6 figures in digital product sales, that can easily become a 5 or 6 figure problem overnight. And don't even think about withholding tax when you haven't even triggered Nexus. That's illegal. Sales tax Nexus is not a niche issue for massive e-commerce brands anymore. It is a real, present, and growing risk for every creator selling digital products, courses, templates, presets, or consulting across state lines. If you are scaling, you are exposed, and ignorance is not a defense that tax authorities accept. So what does this actually look like in practice? Let me paint you a picture. Imagine a creator. Let us call her Maya. She has 100,000 subscriber YouTube channel. She teaches graphic design. 2 years ago, she launched a digital course for $297. Took off. She sold it through her own website, processed payments through Stripe, and deposited the revenue into a personal checking account. She filed her taxes. She reported the income. She thought she was doing everything right. Then she got a letter from the California Department of Tax and Fee Administration. California had determined she had economic nexus in the state. She had sold over $500,000 in digital products, and a significant portion of those sales were to California residents. She had never filed a California sales tax return, and now they wanted the back tax, plus penalties, plus interest for 3 years. The total? Over $40,000. Maya is not a tax evader. She is not careless. She is simply a creator who built a business faster than her financial infrastructure could support. And this happens constantly. States are starved for revenue. They have software that cross-references payment processor data, platform payouts, and business registrations. If you are selling at scale, they know. The only question is whether you have organized your compliance before they organize it for you. And Maya's story is not unique. I have seen creators hit with similar notices from New York, Texas, Florida, and Illinois. The states with the largest populations are also the states where creators are most likely to trigger Nexus first, because this is where most of the customers live. The takeaway is not that you should stop selling. The takeaway is that scaling without compliance architecture is like building a skyscraper on sand that looks impressive until the first storm hits. In this case, the storm is a state audit with the power to levy your accounts, garnish your platform payouts, and destroy the business you spent years building. So how do you fix this? How do you keep creating content, growing your audience, and scaling your revenue without constantly looking over your shoulder for the next compliance issue? At Numeratus, we do not do tax tips. We do not sell software. We build financial architecture for digital businesses, and that includes content creators who have outgrown do-it-yourself bookkeeping. Our approach is simple. Compliance first, defensibility always. First, we conduct a full Nexus exposure review. We analyze your revenue streams, your customer geography, your platform structures, and your entity setup. We identify exactly where you have triggered Nexus, where you are approaching thresholds, and where you have exposure you do not even know about yet. Second, we handle the registration, compliance, and ongoing filing coordination. We do not just tell you about it, we do it. We work alongside you to get registered in those states where it's required, set up your systems to collect tax properly at the point of sale, and manage the ongoing filing and remittance process so nothing falls through the cracks. Third, and this is the part that matters most to creators, we integrate everything into a single, cohesive financial system. Your platform income from YouTube, Patreon, Stripe, and every other source is reconciled. Your expenses are categorized properly. Your entity-level accounting is clean. Your records are audit-ready from day one. So if a state ever questions your position, you have a defensible paper trail that traces every transaction to its source. The goal is not to bury you in accounting. The goal is to remove accounting from your mental load entirely. You should be thinking about your next video, your next launch, your next campaign, not whether you filed California's Q3 tax return on time. We are your back office, so you can focus on your front office, creating content that generates revenue. Because here's the truth about entrepreneurship in the digital age. The creators who win are not just the ones with the best content, they are the ones with the best systems. And your financial system is either a strategic asset or a hidden liability. At Numeratus, we make sure it's the former. If you are a creator earning real revenue and you know your financial infrastructure is not where it needs to be, we should talk. Head to numeratus.us and book a consultation. We will review your current setup, identify your exposure, and give you a clear path forward. No templates, no generic advice, just compliance-first architecture built for your specific business. And if you want to go deeper on how to build a business that scales without breaking, watch this next video. It breaks down how the future is here now. I'll see you there.